Welcome. It's the first Friday of the month coming up, which means it's non-farm payrolls day, which is US jobs. We've also got inflation on the wages side and also the unemployment rate to look forward to. Let's take a look first of all at what we're expecting in terms of the broad sweep of the numbers. The jobs themselves, the job creations for the month of June, 179,000 after last month's 138,000 jobs created. Unemployment rates expected to remain unchanged at 4.3%, and the average hourly earnings creeping up a touch from 0.2 to 0.3% month on month. Chris Beauchamp is with us now with some analysis of what should we be watching off the back of this, because clearly this is one of the elements that the Fed is looking at when determining the path of US interest rates.
Yeah, and I think we're expecting, as you said, an improvement in job creation, which is always good to see and certainly makes the Fed's life easier when looking at what they're expecting to do in terms of rate increases later in the year. As ever, also watch that wage number, because it's been the problem for the US that you're seeing a jobs-led recovery, but the wages aren't picking up to go with it. And until that really does, you won't have that kind of inflation that the Fed's been constantly discussing. We saw that in their most recent set of minutes, this split between those people who think inflation will pick up and those that think it might not actually begin to move for quite some time. So wages will be the one to watch. If you get a positive cycle of wages going up, price is likely to go as well. So it's still a key number, even if we're not quite at that worry stage about the number of jobs created each month.
Now, of course, the big, the key out of this is how to trade the number and what should we be watching for and the charts to watch when the figure is released.
Well, we've had a bit of a bounce in the US dollar the last few days, coming off lows, and the key one obviously when FX pairs to watch is euro dollar, very much the most important one I think here. And you've seen a bit of a pullback in what has been a very strong trend for the euro. Now, I think if you get a particularly good number, especially on wage creation, there's scope for some further losses in euro dollar. Perhaps, as you say, they're heading back towards that rising trend line there, because you get the sense euro dollar's looking a tad overextended at these levels. That said, of course, if you get a poor number, you're likely to see dollar weakness, you're likely to see the euro pushing back towards 114.
And what are the implications for a weaker dollar on other aspects of the market?
Well, there your classic play will be commodities, and looking at gold, which is taking quite a bit of a beating the last few days. A recovery in gold seemed in the offing, but then we broke that 1240 support level, and as you can see, there were also got discussions over whether there's a double top going on. I would think the big thing to watch is that May low at about 1214. If that breaks, then that sequence of higher lows we've had in gold since December will disappear and will change, and then you might see a bigger unwind, potentially down to 1194. That was the March low, and then as you can see there on that chart, maybe even further, but maybe all the way down back towards 1132 over the longer term. It has been quite a difficult period for gold, and so far there's no sign of that changing, and a good non-farm payrolls reading could make that even harder for gold.
Okay, all right, Chris, thanks very much indeed. Chris Beauchamp with analysis there on some of the trades to watch out of Friday's non-farm payroll release.